Hello friends, this is Raj Sastry from Raja Option Trading. Today let's talk about top solar stocks. With that, today is August 4, 2021. So as you can see here, we got a couple of great solar stocks here, starting with Sunworks. $8 stock has done great for 1 year, 539%. Then we got ReneSola, $7.20, astounding 397% in 1 year. And we got SunPowe, Enphase, one of my favorites, JinkoSol, Daqo, and so on and so forth. So these are some of the best solar stocks you can buy, and we'll cover these in a little more details and look at their profitability, look at their margins, and also go through and see if they're worth investing at this time. So with that, let's get started. And from a top news perspective, here we got a couple top news. Looks like hedge funds have never been this bullish on Sunworks, ticker symbol SUNW. These guys provide photovoltaic based power systems. And then we got ReneSola. Looks like this is doing some solar projects in Italy. Again, great story here. And they develop, build, and operate and sell solar power projects. And then we got SunPowe here. Looks like the stock dips after the Q2 earnings miss, and guidance disappoints. Could be a good time to buy some as stock is selling off. So they deliver solar solutions worldwide. Then we got Enphase Energy, one of my favorites. It's a leader along with SolarEdg. Looks like the stock jumped after Tuesday, and they reported quarterly earnings, and stock remains strong, almost near all-time highs. This Enphase Energy designs, develops, and manufactures and sells home energy solutions. And then we got JinkoSol JKS. Looks like they've been selected as an eco leader by Green Builder, and these folks develop, design, and produce marketing of photovoltaic products. And last but not least, we got Daqo Energy, a ticker symbol DQ. It's a Chinese-based solar stock. They also manufacture, sell polysilicon photovoltaic products. It's a great story. This stock has been dropping off of late with the human right violation, acquisition back in China. So with that, let's look at these and a few more stocks and see what's worth buying at this time. So with that, here we got top solar stocks. As you can see here, top of the list we got Sunworks. The way this chart is organized is I got a company and the price and the market cap. That tells you, how is the company at this time? Is it a big company, small company? What capitalization it is. Then we look at sales and sales growth. Very important for a company to have sales growth. I got 5-year sales growth, 1-year sales growth, and quarter-over-quarter growth. And then we got gross margin. Typically, many folks look at rule of 40, quarter-over-quarter margin or sales growth plus gross margin greater than 40. We call it rule of 40. As you scan through, many of the companies here easily beat the rule of 40, which are great buys. And we can also look at other factors like what is the RSI. If the RSI is below 50, typically good entry point. If it is above 60, then watch out and wait for a pullback. So with that, we got sales growth, the margin, debt to equity ratio tells you is the company taking too much debt. As an example, here we got JinkoSol and even SunPowe, JKS. They all have a little more debt on their balance sheet. So something to watch out for. Even we got some more here as we go forward. I highlighted them in red for you to know they are using more debt on their balance sheet. Maybe it's okay for a solar company because they have to capitalize, but something to watch out for. Then we got ROE, return on equity, tells you if the company is profitable. In many cases, these solar stocks have got negative ROE, meaning right now they are not showing profit, which may be okay. So something to watch out for. If you have to pick one with positive ROE, that will be always better. And then we got RSI, tells you the entry point as you scan through here. I would not touch stocks with a high RSI. For example, you got here STECF $27 stock. So looks like at this time for this stock RSI seems to be 100. So I would shy away when to buy when at the top. I would rather wait for a little pullback and then buy. And same story with the NextEra Energy. Looks like it's 67. We would rather wait for a little pullback and then buy. And then you got institutional ownership, tells you who are these big institutions backing this company. A higher institutional ownership is always better, but lower is also okay. Typically we look at the trend and see if it's going up or going down. Then we got float of short. This tells you, when the float is high, especially about 10%, any good news stock can go up and cause a short squeeze. That's when you get a lot of swing trading opportunities. So many of these stocks, as you can see here, have got short ratio greater than 10%. I have highlighted them in red. Those are the candidates. On the down days you could buy them and they can surge higher. And then you got price to sales ratio. It's a valuation ratio, tells you if the stock is overvalued. For example, a higher PS ratio. As you look through here, we got ASTI 2-cent stock, very high PS ratio, and also a couple others here. For example, here BEEM, a little higher PS ratio, which is manageable. And then you got performance 1 day all the way through 5 years. You should always look at even 1 year and 5 year too, because that tells you on the long term how is the company doing. For example, here you got Enphase Energy did very well 1 year as well as 5 years. That tells you company's got staying power. This company can do very well. Same story, SunPowe has done great in 1 year and 5 years. So these are the things that you can go with always stable stocks. And even smaller company like ReneSola, they got nice 1 year as well as 5 years. So that tells you, this company has staying power. They can show growth even in 5 year time frame. And then we got how much it's off from 52-week high. That tells you, are you buying at the top, or are you, buying at a discount to 52-week high? As an example here, STECF, it's at 52-week high. You could wait for a little pullback. As you scan through here, one more here, XISHY almost at 52-week high. So you'd wait for a little pullback before you buy these stocks. So with that, I also highlighted few stocks in gray background here: SunPowe, Enphase, and so on and so forth. These are typically the ones that I like at this time. SunPowe, as an example, it's a negative 5 year and 1 year sales growth, but it's got positive quarter over quarter growth. As you scan through here, nice gross margin as well as net margin. That tells you companies keeping money for itself and showing profitability. And it's profitable through by ROE, return on equity ratio. RSI is 45. That tells you can buy at this time, and stock has done nicely. And same story, Enphase. Enphase is one of the market leader here. It's one of the higher capitalization stock here, $25 billion capitalization. Nice sales and sales growth. I love this sales and sales growth and the consistency here. They also have one of the bigger gross margin. So I like to see the growth, sales growth, as well as nice gross margin. I think this company fits the bill. And they also have positive net margin. And as you scan through here, RSI is 57. That tells you buy cautiously. Stock has gone up, as you can see here, off late. I would buy on dips versus jumping in, buying a lot at this time. Then we got Daqo. Daqo is a $60 stock. Nice sales growth and nice gross margin as well as net margin. Company is profitable. They got a high short ratio, as you can see here, 12%. Stock RSI is 47. This stock you can buy even up here. It's not expensive. and it's done nicely for 1 year and 5 year. And then we got Canadian Solar CSIQ, $41 stock. As you can see here, nice sales growth here and nice gross margin. Clearly fits rule of 40, quarter over quarter growth plus gross margin greater than 40 here. And as you scan through here, RSI is 49. You could buy this stock at this time. It's oversold here, and nice performance both 1 year and 5 year. And we got Hannon Armstrong here, HASI, same story, nice sales growth here. RSI is 53, you could buy even up here. And stock has been doing nicely, even 1 year and 5 year. And then you got here Nova, Sunrun, and AY, all positive sales growth, nice gross margin. And in AY, they also have a nice net margin here, which is always great. And stocks have been RSI wise, at least Sunnova and Sunrun are buy at this time, good entry point. AY is a little high, you could wait for a little pullback here. They've done nicely, as you can see here, in 1 year as well as 5 year. That's the whole list here. You could go through here, and if you're a contrarian, you could even buy some of the stocks that are beaten down. For example, Maxeon, $16 stock, has been beaten down a lot, as you can see here. 1 month, 3 month, and even Array for that matter has been beaten down off late. You could buy these as contrarian plays and go from there. And if you're a dividend investor, you could look at companies like NextEra, $79 stock here, high capitalization, $155 billion capitalization. This is one of my favorites. It always does well. Right now, it's $16, 16% in 1 year, and nice 182% in 5 years. Stocks like NextEra Energy, you could sleep at night. These are stabler stocks, a nice dividend, and also okay growth. And we got here AZRE Azure. It's an Indian solar play here, $25 stock. It's okay, from a sales growth perspective. Nice gross margin, as you can see here. I think this one is also okay. With the India population is growing, people are looking at alternative energy. This could be okay play also. So with that, now let's look at a few stocks and charts and see if they're worth investing. So with that, here we got a few charts here. First, let's look at SunPowe. SunPowe, as you can see here, stock can be manipulated. It's a low dollar stock, around $8.43, as you can see here. Stock has been doing okay, on a long-term chart basis. Stock caught fire here, probably short squeeze, as you can see here. Since last January, February, stock has been trading sideways. So this is when you can buy a little bit slowly here. Typically solar stocks will do very well during the year end. That's when people want to install some of these solar and get some federal tax credit, especially in the United States. So typically they tend to do well during the second half of the year. So you could look at Sunworks here. Only thing to notice is Sunworks is, from a growth perspective, sales growth perspective, negative sales growth. From a quality of the stock perspective, not great, because sales growth is negative. They got net margin negative, company not profitable, which is okay, and a little bit lower gross margin. And they've been selling off of late, as you can see here. That's why this is a contrarian play. RSI is 44, stock is selling off of late. They've done great for 1 year. You could buy a little bit at this price and hold it for a while as a contrarian play. Given short ratio is 21%, as the shorts get squeezed, you could see some action somewhat like this. So that's a possibility. You could buy and hold some of the Sunworks. ReneSola, as an example, $27 stock here. It's similar pattern, as you can see. This also goes through similar pattern here. Big short squeeze, trading sideways of late. So you apply similar methodology here. They also have negative sales growth, and they turned positive quarter over quarter. That's good. And gross margin is 30%. Net margin is 11%. From a quality of the stock perspective, this has got a little bit better quality because of the positive sales growth and positive gross margin and positive net margin. I think this could be a better play and a little bit bigger, market cap, and they also have short ratio, which is not as high. It's 5% at this time. So you could see a better short squeeze in Sunworks than ReneSola. Then we got SunPowe here, $25 stock. They also have positive quarter-over-quarter growth and positive gross margin and a higher short ratio. So between Sunworks and SunPowe is a little bit better quality play. It also has a higher short ratio. You could buy this one instead of Sunworks and expect a nice short squeeze as the stock goes up. Then we got STEDY here, Enphase. It's again a great stock. It has got its ups and downs, as you can see here. Typically always good to buy Enphase into any pullbacks here. At this time I would wait, because after the earnings stock has shot up. It's trending towards not quite all-time high, trending towards all-time high. I would wait for this to cool off a little bit and buy some Enphase energy and hold it for long term. Enphase energy, as you can see, a nice sales growth here. I love it. And trailing 12 month sales is 1.06 billion. Market cap is 25 billion. This is one of the stabler companies and steady eddy type companies. I think it's been doing great from a quarter-over-quarter growth and gross margin 44%, one of the best in the industry, and the net margin is 17%, again great. And as you can see here, profitable from a ROE perspective. RSI is 57. That tells you wait for a little pullback, no need to buy at this time, wait for a little pullback here. And as you can see here, institutions are backing this company up nicely, 71%, low short ratio. Little expensive from a price to sales perspective. Stock has done great, from a performance perspective, 1 week, 1 day, 1 day, and all the way to 1 year and even 5 years. 16% off from 52-week high. I would recommend buying Enphase on any pullback. As you can see here, it gives a lot of opportunity to buy. I would buy it, just hold it, basically put it away for long term. Then we got JinkoSol here, $57 stock. It's a little better quality, like growth perspective, it's okay. It's done 10%, 2% in 5 year, 1 year respectively. Quarter over quarter negative. From a sales perspective, they got $5.3 billion sales. That's one of the biggest sales in this chart here. And market cap is 2.7 billion. And from a margin perspective, it's not great. That's why from a quality perspective, I like Enphase better with the 44% margin versus JinkoSol, which is 17% margin. This also has a high short ratio, as you can see here. And by looking at the chart here, I would, this can create some short squeeze. Right now, RSI is 52. I would buy cautiously here. This can create some short squeeze. And performance perspective, they've been doing okay. They've done nicely for 1 year as well as 5 years. So JinkoSol, I would buy on any pullback. It gives a lot of opportunity to buy and go from there. Next is Daqo Energy. This stock has been doing great, but it's a great from a sales and sales growth perspective. Nice gross margin and net margin. Quality of the stock perspective, this is one of the better run companies. And as you can see here, profitable company from a return on equity perspective, and RSI tells you it's oversold. You could buy Daqo Energy at this time. It's a nice entry point. Nice institutional backing, 62%. Stock has been selling off, as you can see here. There is some near term strength here. A nice 1 year as well as 5 year growth. Performance perspective, 53% off from 52-week high. I would buy some Daqo Energy because of the Chinese market and some acquisition against the company around human right violation in the area it's in. That's why stock has been falling off. I would take advantage of this, this pullback and buy some Daqo Energy. Next, we'll look at couple more here. Sunrun, as you can see here, it's also similar pattern. Company can be manipulated, low price stock here, and it's done great from a quarter over quarter sales growth perspective. Low market cap, $82 million, and a very low sales, 24 million. As you can see, our company has been selling off in 2 week all the way to 6 months, showing some strength in near term. So you could buy a little bit into this company here. Given short ratio is just 60%, stock has been sold off and showing some near term uptrend. You could buy some and hold it for a while. Then we got BEEM here. BEEM is a little bit better company than iSun. As you see here, nice sales growth. 5 year 19%, 1 year 24%, quarter over quarter 4%, but negative from a gross margin and net margin perspective. So this is why you got to be watching out. Be a contrarian if you want to buy this stock right now negative, which is okay. Um, as you see here, stock chart perspective, nothing great here. You could take advantage of this downturn or a pullback and buy some and hold it. Stock has been selling off in 2 week all the way to 6 month, but showing some strength in 1 week. So that's why you could buy some and hold it for a while. So that's BEEM, and next is CSIQ. It's one of the better run companies. As you can see here, nice sales, $3.7 billion, and nice sales growth. 1% in 5 years, 17% in 1 year. Nice 32% quarter over quarter. Nice gross margin. Quarter over quarter. Sales growth plus gross margin handily beats rule of 40. And as you scan through here, they also have a net margin, which is always great. And RSI is 49, tells you even up here you can buy the stock. And as you scan through, stock has been selling off a little bit in 1 month, showing some improvements in 2 week, 1 week, and 1 day. I would buy some solar, Canadian solar at this time and hold for a while. Then we got First Solar here. First Solar is a very steady Eddie stock. I would buy on any pullback. All the pullbacks that you see here are always good buying opportunity. I would buy this company on any pullback. I've been watching this company since last 10 years or so. Great long-term play. Always gives a good opportunity to buy, especially in some quarter after the earnings stock comes down to earth. Those are the good opportunity to buy this stock. As you can see here, sales growth is not great. And they got good gross margin and good net margin. Company is making money. Stock has been going up off late. As you see here, RSI is 58. I would wait for a little pullback, wait for RSI to drop below 50, and then buy the stock. Then you got two more here. SolarEdge, one of my favorites. SolarEdge, as you can see, a stock chart is doing nicely, shot up nicely. As you can see, a big gap up here. Right now, RSI is 52. I would wait for a little pullback to buy this company. Nice quarter over quarter, I think quarter over quarter growth perspective, it's negative. Nice gross margin. And company has done nicely from a performance perspective, all the way from 1 day, 1 week, all the way to 3 month, but 18% down from 52-week high. And then we got HASI, and here if you see here, this is also a good better run company, and they got RSI 53. Nice sales growth. I love this sales growth. And they got nice net margin also. Any pullback on this stock, I would buy this company HASI and take it from there. We got one more page here. We got Sunnova, nice looking chart. I like this chart here. Right now, company is really profitable from a 1 year quarter over quarter growth perspective. Handily beats rule of 40. And net margin is negative right now. Company not making money, but RSI is 53. You could even buy up here, and nice performance from a 1 day, 1 week, all the way to 3 months, but negative. It's down 35% from 52-week high. And same story with Sunrun. It's also a better run company, as you can see here. RSI is 50. You could buy even up here and hold for a while. Down 47% from 52-week high. Then you got AY. As you see here, AY is nice looking chart here. Right now, RSI 61. I would be cautious. Wait for a little pullback. Wait for RSI to be below at least 55 before you jump in. And then you got AZRE, Indian solar company, right now trading in the sideways pattern, as you can see here. And RSI is 50. You could buy some of this stock, in this sideways trading pattern and hold it for a while. And nice looking sales growth, as you can see here. Nice gross margin. That's great to see. Then you got NEE NextEra. It's one of my favorites, as you can see here. Gives good opportunity for you to buy. I would wait for a little pullback. RSI 67 tells you got to wait for a pullback and then buy. And then we got FTCI $10 stock, FTC Solar. As you can see here, right now it's okay to buy. And RSI is 42, oversold at this time. But there is no, at least by looking at this, there is no sales growth. Quality perspective, I think not as great as other stocks, but I think it's okay. It's a pullback. Company does show some conviction. It might go up as you go forward. So with that, let's look at one or two companies in a little more detail. First is Enphase Energy, one of my favorite, $25 billion market cap. As you can see here, nice looking chart. Sometimes after 2019, stock caught fire, as you can see here. Typically, somewhere in September timeframe, stock drops, and during the year end, it will stock go up because most of the people want to get federal tax refund, and that's why some of these solar stocks will go up toward the quarter end, because many of these solar projects to get federal tax credits. That's why around the year end stock goes up. And promptly after the new year, stock dropped again. Good buying opportunity, then took off again, dropped again. As you can see, there's a good pattern here. These type of stocks always makes higher highs, nice higher highs, as you can see here, but always gives you buying opportunities many times as you go forward. This is a 5-year weekly chart to give you bigger perspective here. Again, stock sold off pretty hard back in 21, April, March, April time frame. Good buying opportunity, and now it's kind of going higher. I would wait for a little pullback. At least I think it'll pull back maybe to 175 levels. You could buy some at this time and hold for a long time. This is a long-term play. Even if you buy up here, if your time horizon is long-term, you would do very well with the Enphase Energy. Next, we'll look at SolarEdg, again, one of my favorite stocks here. Similar trend here. Sometimes after 2019, stock caught fire, and it's doing nicely. Some dips during COVID-19, stock dropped and then went up nicely. Again, drop, went up. Always gives you buying opportunity. That's why I love looking at the long-term chart. Even many investors get caught up in the day-to-day what's going on. But the moment you look at the longer term chart, the pattern seems very obvious. It's always good to buy these secular growth type names when they're down, and don't worry too much about losing money. You could invest and hold it for a long time. Next, let's look at one more. This is First Solar, one of the stocks that I've been watching for a long time. Similar trend here. This gives a little more ups and downs, as you can see here. Down here back in 17 April, went up all the way, came down, in 2018, then went up again. This also is a great play. I would wait for a little pullback, hold the stock. It gives you a lot of opportunities for you to buy, and then hold it for a while. Nice bounce back, as you can see here, down, nice bounce back, down again, nice bounce back here, now down and trying to make its way up here. So with that, with solar stocks, I think I love solar stocks because this type of renewable energy is going to gain more and more popularity. That's why all this solar and renewable are the way. In the future, many people and companies will really start buying this renewable energy going forward. That's why it's a secular trend. So with that, thank you very much. Happy investing and trading. Please subscribe.